Here in this video, I will go over my expectations for Tesla stock in the near term, but I think more important, my new price targets for 2024 and 2025. We have a lot to get into. I'm not going to sugarcoat it. Some people are going to love this video. Some people are going to absolutely hate this video. But the one thing that I ask you to do is not hit the like button or subscribe to the channel this time. I'll ask you to comment down below. What is your expectations for 2024 and 2025 for Tesla stock? I will also share with you the biggest risk to Tesla at this current moment in time, and it's not something a lot of people are talking about. So let's go ahead and get started. I want to start with your near-term catalyst for next week. Now, I talked about this a little bit in the last video, and I plan to make an in-depth video on Sunday, so I don't want to focus on it too much. But just to point out, I think the near-term backdrop for Tesla is likely pretty dang positive. And there's really two fronts to this, or three, I guess. You have earnings, you have the Fed, and you have economic data. Okay, earnings were basically over the hump of earnings. And no, earnings is far from over, but we got Microsoft and you got Google. You're going to get Amazon on Tuesday. They're probably going to do very well. That seems likely at this point. If Google did well, I'm sure Amazon's going to do well. And Google has been like the problem child as far as the AI race, right? Recently has performed better, but nonetheless, I expect Amazon will do well. Apple, I think they're going to do pretty bad, but I don't think the markets need Apple anymore. So I think even if Apple, wets the bed, it's not going to be a huge deal for the markets. Tuesday, when Amazon reports, you will also get AMD and Supermicro, and I think these are really the wild cards for this week in terms of companies that can have a huge effect on the markets, right? For an example, if AMD and Supermicro come out and wet the bed and just completely sour the mood around AI, that's going to have a sympathy reaction to NVIDIA, to Apple, to Google, to even Amazon and Microsoft, all of your big tech names, and that could move the markets quite a bit. Now, Supermicro kind of started a little bit of this fear because about 2 weeks ago, when they announced their earnings day, they did not pre-announce their earnings, and that was the day Supermicro was down almost 25%. They've pre-reported on earnings, basically come out and say, hey, we're going to beat, here's the numbers. They've done that since 2022. It was the first time that they have not done that. Maybe they're just trolling and then maybe they're going to report something fantastic. Who knows? And I think that's why it's a big wild card. I would be a little bit careful to, draw definitive conclusions. So anything is on the table here. And I think these two stocks could actually have the biggest impact on the broader markets for this upcoming week. And I do think to some degree, you're better priced for, average okay earnings because they've kind of set the tone that way. People are assuming Supermicro is not going to beat. As long as they don't miss, then things probably will be okay. But I think really long story short, after Tuesday, the earnings risk for the broader markets is over with until we get NVIDIA earnings, which will be towards the end of May. Then when we get NVIDIA earnings, that's obviously going to be another huge catalyst or a huge earnings catalyst for broad markets. But we have some time between now and then. Now, why I'm pretty optimistic for this week is because on Wednesday, we are going to hear from Fed Jerome Powell. Now, I've been saying this since the start of 2024. Jerome Powell is basically begging for a reason to start reducing rates. And he just got a little bit stronger of a reason. Your GDP report that came out last week came in about 1% lower than expectations. Now, to offset that, you did have personal spending that was rising, data points kind of going back and forth. You've had some service data come out pretty bad recently, like ISM service and S&P Global Service PMIs. They've come in lighter than expected. So maybe the economy is not as strong as we thought. And that could give the Fed a reason to justify actually lowering rates. Now, specifically why I'm pretty optimistic this week for Tesla. If you guys seen the last video that was put out here on the channel, we had some big news come out today. Enhanced autopilot is now offered in China. That's huge. And Tesla just raised prices of the Model 3 Performance, indicating good demand. And obviously that should be beneficial to margins, but exclude that. Tesla is a very interest rate sensitive stock. Now, Tesla has done what it's done over the past couple of days, going, from 138 up to 173 and some change here recently. That was a bottom to top move of about 24%. Tesla's done that at the same time 10-year treasury yields are sitting at highs for 2024, right? 10-year treasury yield was down about 4 basis points on Friday. That's good, but you're still sitting at about 4.66%, and you were just as high as 4.7%. Markets are pricing in one cut for 2024. And I think the Fed, they don't want to commit to anything. I don't think they're going to talk about raising rates as a realistic, possibility at this point. I think we're still kind of far from that moment. I think the Fed can come out and say, we're expecting to cut rates a couple times in 2024. And when the markets are just pricing in one cut, that's seen as really positive. Now, I would be a little bit less or a lot less positive on this upcoming week if markets were still pricing in 3 cuts. We're not. We're kind of lowballing the Fed. The Fed's pricing in more cuts than the markets. And the last time that happened was, the beginning of 2024. And what happened? Markets did pretty well overall, even as the amount of cuts started to get lowered. So I do think there's a lot of meat on the bone, per se, for 10-year treasury yields to fall and to get pleasantly surprised with a more dovish than expected Fed Jerome Powell. And after all, your PCE report that came out on Friday was in line with expectations, and the Fed themselves have said just inflation coming in line with expectations is generally seen as good news. Okay, so I think you're priced in a very good way heading into the Fed on Wednesday of this upcoming week. Now, if stocks rally into the Fed, then you probably want to grab some puts. If markets sell off into the Fed, you probably want to buy some calls, right? It's all about what markets are expecting and pricing. But overall, I think that could be good for Tesla, and I think 10-year treasury yields could be coming down. We're also expecting to get a lot more clarity on the balance sheet reduction. Currently, the Fed is selling about $60 billion a month, or letting roll off $60 billion a month in treasuries off their balance sheet, and about $30 billion in mortgage-backed securities. Most people are expecting that number could drop at least in half, if not down to like 25% of what they're doing now. And that will be less supply for the bond market. You still have the Treasury that is selling a lot of bonds, but less supply coming from the Fed could mean that lack of supply is offset, and you could start seeing more demand in the bond market. And that is what will ultimately drive Treasury yields lower. I am pretty dang optimistic this week for Tesla stock. Plus, Tesla was down 1% on Friday. That was a little bit of your reset, right? When you go up this much, especially when you don't have treasury yields falling, you don't have other factors playing a positive role to Tesla. It was just earnings. Eventually, you're going to see a consolidation and or correction from a 24% bottom to top move. If you only correct 1% like you seen Friday, and that was that little bit of consolidation, that can set you up to continue higher. Now, I think next week will be good as long as Supermicro and AMD do not wet the bed. If they don't wet the bed, then, that's a bigger problem. And I'm honestly more concerned with them, with those companies doing poorly and that negatively affecting the markets than the Fed. I don't think we're going to get a big flip-flop from the Fed, at least not based on the latest PCE data that we just got. We are in the Fed blackout period, so the Fed hasn't commented on that. But last we heard from Powell was they still expect to reduce rates, but they haven't become more confident. And I don't think the latest PCE report did that, but I still think they're going to forecast at least like 2 rate cuts in 2024. And at that point, that would be good news. Now, we will have your unemployment rate as well as your non-farm payrolls coming out on Friday, and that will also be important. It wouldn't surprise me if the Fed has that data before the Fed meeting on Wednesday. The Fed officials tend to get the data a couple days early, and, well, I think if that report's not as great or really good, that could obviously affect the Fed's tone a little bit. So I'll be watching for that, but overall, expecting the same old from the Fed. They don't want to make any drastic changes because they realize with Fed funds rates this high, just communicating the wrong thing could send stocks lower, could slow down consumer spending, could be a catalyst to push the economy into a recession. And that's the last thing Fed Powell wants on his resume, is to be late raising rates and to cause a recession. And I think a lot of people forget it is an election year and there's a lot of political pressure on Jerome Powell to start reducing rates. And that is probably going to have an effect as well. And to be quite honest, I don't want to bet against that. The government, I don't want to get demonetized here, but I mean, they're more crooked than the controller, okay? You can imagine there's a lot of pressure on Powell right now that we don't even hear about. Now, that's in the short term, and I do think in the short term, we're still setting up for a run as high as about 220. That is based on, if you look at StockTwits, sentiment is only neutral there. There's not a lot of people. It's even bearish now at 42. Go figure, right? There's a lot of room for that to flip from neutral or bearish to a more positive sentiment. And I do think there's room for retail investors to jump back into the stock because I think a lot of retail sold out and they're likely going to jump back in. Also, hedge funds and institutions that were spooked over the last couple of months. There's a lot of new positioning that likely needs to go into Tesla just to be kind of balanced with the S&P, right? These hedge funds have gotten way overweight on Microsoft and Apple and these large components where they've been really underweight Tesla. Now that Tesla may start to outperform some of those stocks on a percentage basis, maybe there's some more reallocation, and you do have a multi-year high for the short position in Tesla. So for all of these reasons, plus just overall the narrative has changed for Tesla. Tesla is doing things to add shareholder value, and Elon is now effectively working for you, not against you. I think all of these are playing into a very bullish cocktail for Tesla, let alone if 10-year treasury yields fall in this upcoming week. Yeah, that could be super positive. Now, for 2024, Wall Street is currently expecting $3.08 of EPS. 1 month ago, they were expecting $2.87. So actually, in the last month, your EPS estimates for 2024 have went higher, and now you're at $3.08 per share. Assuming that is the number that we actually come in at, I do think there is some room for a lot more multiple expansion as we head into the first cut from the Fed towards the end of this year. Right now, the markets are pricing September. Around that same time, markets are going to be getting very optimistic about a new model coming in which we'll have a lot more information by then. Elon said by the end of this year, if not the beginning of 2025. We're a little early to be pricing in optimism based on that, just be it we're not even in May yet. And, 4 months from now, you're going to be in September, right? 5 months from now, you're going to be in October. It's at least 6+ months away before we could get the next gen vehicle at the bare minimum. Markets, they do tend to price in, 6, 12, 18 months in advance, but it was kind of a loose-ish guidance from Tesla. They did not give a definitive date. They said by the end of this year, if not the beginning of 2025. So I think you're a little early for that optimism to head into Tesla. And again, consider Tesla has done very well when 10-year treasury yields are almost at cycle highs, right? Approaching 5%. If 10-year treasury yields were lower, if they do start to fall, then I think you get more multiple expansion and you get more optimism from Tesla. And again, the multiple expansion, I think at this point, could be explainable because of, look at just how much value Tesla stock has lost. You're getting so close to FSD, the robotaxi network, all of these huge catalysts, the next gen vehicle. I think the markets will assign a higher multiple to Tesla. At one point, Tesla was trading at a 1,200 times multiple. And today you're trading at in the 50s. I think that could probably double towards the end of this year. In kind of a momentum-like scenario, okay? And it's actually funny how things work. NVIDIA used to trade at a higher multiple, like double the multiple it trades at today. NVIDIA used to trade with a 60 plus multiple. Today it trades in the 30s. That's because before something happens, before you hit that exponential growth curve, and your business starts to take off, example like NVIDIA, investors are saying, hey, how big can NVIDIA get? And they're assigning whatever the number is, right? A lot of people were saying like $2 trillion. Lo and behold, NVIDIA is $2 trillion today. And that's kind of the narrative that they go with. So they assign a larger multiple in the current moment because the market is huge, right? For GPUs, it's huge. But when when NVIDIA gets to $2 trillion and they're bringing in $25 billion a quarter, investors start to say, how much larger can this thing get? So, and how much can EPS continue to grow from here? There's something I really like to use. It is called the PEG ratio, price earnings divided by growth. Okay. And all of those things start to look a lot worse as the company gets larger and larger. That's why multiples tend to start out high and then fall over time, even as the business becomes more profitable and a larger overall company. So I think as you head into what the markets perceive as an exponential growth curve, which is the next gen vehicle, and then ultimately the robotaxi from there, I think the multiple can expand at least double from here. I think it wouldn't surprise me if Tesla is trading at 100 times multiple by December of 2024. And that would be about $308 a piece. And a lot of Wall Street's going to justify that with, we're starting to get rate cuts at that point. So I think a lot of Wall Street will come to their senses and terms and say, you know, maybe $308 for Tesla is not that bad. After all, Tesla stock used to trade at all-time highs at $415 per share. That would still be 25% lower than where Tesla was at previously. So for these reasons, among other smaller reasons, I think the multiple can likely expand to about 100. Now, things get really juicy for 2025. So call it 308, 310, 315 by the end of this year. I wouldn't be surprised. Now, I would be perfectly content if Tesla closes this year under $100 per share. Okay, that is that's just fine with me. I'm a long-term investor. I would love to buy more shares cheaper. Yet I don't think that is happening. I think Elon totally changed everything for Tesla. Let's just be honest. We're going to look back and say, wow, this was the defining moment for Tesla that everything changed. Like your Mark Zuckerberg kind of moment, right? Your meta moment. This is Tesla's meta moment. Now, I think the one thing that I want to point out that I mentioned in the beginning of this video, the number one risk for Tesla right now, I think, is a recession. Okay. If we do go into some kind of surprise recession, if something happens, typically there's a catalyst for a recession. Think dot-com bubble, think 08 financial crisis, think Rona. In recent times, for basically most of your guys' entire investing lifetime, there has been a central catalyst for a recession. I don't know if we get a centralized catalyst for a recession or one thing in particular that causes some kind of recession. But I think that's the biggest risk to Tesla from here is a recession, because markets are not priced for that. Nothing is really priced for that. And if you do start to go into one, or it starts to look like we could go into recession, there could be a re-rating for general, P multiples and general markets. And that could be ugly because you're trading at 21 times next year's earnings with very high earnings expectations. Imagine a scenario where earnings expectations, the actual number itself, comes down from, let's say, 250, roughly where it's trading at today, down to like 230. And then say the multiple goes down from 21 to 18 or 19. That's problematic. Very problematic. So I think that's the biggest risk, long story short. But I do think in 2025, things get really juicy because Tesla's EPS is probably going to explode. By then, you should have a decent ramp going on the Cybertruck. You should have a much better ramp of the next gen Model 3. By then, it shouldn't even be a question, right? Tesla should be producing more Model 3s, refresh Model 3s than they were previous Model 3s. Model Ys still, I expect, are going to be selling very well, and interest rates are going to be lower. So I think there's going to be more organic demand for Tesla. And as rates go lower, Tesla can likely start to hold some of the price increases that they do, right? Instead of raising prices $2,000 and then cutting them $2,000, they might be able to hold them there for a longer period of time, and then, fluctuate from there. So I expect EPS will come in a lot better in 2025. And your year-over-year comps are going to be really good, like juicy comps. You're going to be looking at over 100% year-over-year EPS growth for Tesla, basically every single quarter in 2025. If all quarters in 2024 look anything like Q1 did at 45 cents of EPS, Tesla's going to be able to smash that. And that looks very good. So I think that's also going to help things out as well. And I feel pretty comfortable leaving Tesla's multiple at about 100 in 2025. Now, 2025 EPS on Wall Street is expected around $4.05 per share. So simple math there would say, boom, Tesla stock could be a $405 stock by the end of 2025. Now, I think by the end of 2025, you do have a lot of big money on Wall Street that is betting for Tesla stock to be $500+ per share by the end of 2025. So it wouldn't surprise me if you're somewhere in that range. And let's be honest, I think Tesla's going to come in with higher EPS than that. Call it $1.25 every quarter, average out to about $5 of EPS, times that by 100. Maybe you're closer to $500 by the end of 2025. And by then, we may have robo-taxis operating out on the roads. So it wouldn't surprise me if the multiple was even higher than 100, especially if the Fed is able to really start to get some rate cuts moving by the end of 2025. Now, you could be a lot less optimistic about this, okay? You could take the multiple way down. So you could say Wall Street's correct, $4.05 per share by 2025 EPS, and say maybe you're trading at 65 times multiple. That's $263 per share. On a percentage basis, that would still be a very good return from here. But again, you have to consider by 2025, markets are looking at forward 12-month earnings. So by the end of 2025, you're going to be looking at 2026, and Wall Street's expecting $5 of EPS by 2026. And even in a bad multiple scenario like a 60, you're still looking at a $300 stock. So I'm more optimistic than your average folk, I guess. But I do really think this was the meta moment for Tesla. And I think when Wall Street realizes that, and they have not realized that yet, that's when Tesla starts to see some large gains. And after all, you've never been closer to the robotaxi network as you are today. You're finally getting down to actually seeing that lower priced Tesla model. And these were things investors were investing in Tesla for back when the stock was $400+ per share. I think justifiably the stock probably shouldn't be in the 160s today. And that's why I continue to buy Tesla stock and have been buying Tesla stock. So let me know what you think about this down below in the comment section. What is your expectation for this year and next year? And really, what would you be happy with? Like if Tesla stock's 250, would you be happy with that by the end of 2025? Let me know what you think down below in the comment section. Nonetheless, thank you guys for watching. Enjoy the rest of your day. If you guys want to come trade with us live in real time, have some great things planned for that group. Come check it out as we grow and improve that service overall. You guys enjoy the rest of your day, and I will see you in the next one.